Hi, and welcome to the Stock Scores Market Minutes for May 9th, 2016. Let's talk about when we should trade hard. There are times when you should work hard trading, and there's times when it is best to be lazy. It is more profitable to trade when there is a trend. You see, when markets have risen into resistance or fallen into support, when they are within a trading range, there tends to be more uncertainty, less follow through, and the result is that our trades will not be as profitable or as successful as we would like. We want to trade when there is conviction, when the buyers are strong and the market's trending up, or when the sellers are strong and the market is trending down. On whatever time frame you like to trade. If you're a day trader, you look at the 2-minute chart or the 10-minute chart, whatever. That's the conviction that you want to see is there a trend on that particular chart? So when there is conviction, trade hard. When there is uncertainty, that's okay to get lazy. All right, let's quickly recap or talk about the webinars that I have coming up in the month of May. They're all free. You can learn some of the simple ways that I use to read charts, to manage risk. I'll show you the tools of stock scores, the services of stock scores, all designed to help you make money in the market. These are all free events. If you go to the stockscores.com homepage, which I'll show you quickly here, there you can see the stockscores.com homepage, and on the right side of the screen here, you've got links to all of the webinars. If you click on the View All Webinars button there, it actually takes you to stockscores.com/webinars. All the events as well as descriptions are there. So give that a look, and hope to see many of you at these upcoming webinars. All right, let's talk markets now. The first chart, as it always is the 30-day, 60-minute chart of the S&P 500. And you can see that this market had been trending higher through April, and then it fell down from a falling top right at the end of the month there. And since that time, market has been a little bit less active. I would say fewer trading opportunities. However, the pattern that was building is something called a falling wedge. I talked about this in my daily newsletter. And there you see the falling wedge pattern. And we broke that on Friday. So that is actually a positive sign that the market's going to try to go up and retest that resistance level. So short term, I think the market goes higher, but it is still, stuck underneath this long-term resistance, which we see here on the weekly chart. I drew that bad. Let me try that again. If we draw a line across the tops of the 3-year weekly chart, boy, that was not much better, was it? Anyway, the point is the market rallied for a few months. It hit resistance at the downward trend line on this chart here, and it's stuck there right now. And I think we will now go back and retest that. But until we can make a real solid break up through that downward trend line, slightly downward trend line, I wouldn't get too optimistic. The market's in a real battle between buyers and sellers right now. All right, Russell 2000 has broken its little rally here. Not much of a surprise given that it had run into resistance on the weekly chart at the downward trend line. So I don't think this necessarily means the market's going lower because it is coming from this little high, but certainly want to be a little more cautious. And as I say, the last week or two, we haven't seen as many good trading opportunities as we saw during this period when the market was really rallying. So be cautious in the near term. Now, the TSX has been a great performer, but this week it sort of gave up a little bit. We saw some profit taking coming in. We're now getting some falling tops there. Again, not real critical. The market has had a real strong move to the upside with the strengthening of gold and oil. But then, of course, you've got that big fire in Fort McMurray, which is really taking a lot of oil production out. That's hurting some of those oil names, which of course have a heavy weighting on the TSX. I think that contributes to the weakness in the market. Now, longer term chart, as we've talked about many times in recent weeks, broke the downward trend line, built a rising bottom, broke from the rising bottom. I think this market looks like it wants to go higher, but in the short term, it might take a little pause after the real strong gains that we've had. TSX Venture, still in a nice upward trend, money coming back to this market. Now, this looks impressive, but in the context of where this market has been in the last 10 years, this is still just a minor bounce so far. Nice flag break on Friday, largely because of the strength in gold, which after a few days of pullback looks like it's going to extend its upward trend. I'll talk about that in just a moment. Treasuries, a little bit of a uptick this week on treasuries, which means interest rates went down a little bit. This optimism is still intact. You can see we've got rising bottoms. That indicates that the buyers are still in control of the US bond market. That means the speculation or the expectation is that interest rates want to rise. However, we're still stuck in a really narrow range that we've been in for a number of months. And so it seems more like we're stabilizing on interest rates as opposed to having a real sharp trend like we had in 2014. All right, US dollar was oversold. We talked about that, I think, last week, where the market had really run away to the downside from the trend line. It's now rallied back to the trend line. 4 days of strength might make some people think that the selling pressure on the US dollar is over, but until we can break that downward trend line from a rising bottom, I wouldn't get too excited about being bullish on the US dollar. The last 4 days, more of an oversold bounce back than anything else. Gold, of course, had that real important breakout that I talked about last weekend with a rising bottom. So that's a real positive. This week, you expect a little bit of profit taking after a move like that. We had the profit taking, but then late this week, we saw the buyers come back. And that tells me that gold really wants to go higher. Maybe as difficult as it is for me to justify after being a bear for so long, the chart tells me it wants to go higher. Oil in that upward trend that we've been in, sort of an upward sloping channel for the last couple of months. It's been quiet the last little while, but it looks like based on Friday's action that we may start to try and trickle up. I think this is more of a trickle higher as opposed to an excited, exuberant push higher, but it's helping the energy stocks, which have tended to outperform the actual move in oil. The VIX had been showing a little bit of a pickup in fear, but on Friday that really fell off sharply, and it looks to me like we may retest the lows in fear, which means market is getting complacent. And more points again to what I said at the top of the video, which is that it looks like US stocks want to move back up to their highs. Now, with that said, I'm only a neutral rating on US stocks, and that's simply because all the resistance that this market is dealing with. The trend is up. We've had a lot of uncertainty in the short term, but we're just coming into some resistance. So I think it could go up for a few days, but it's going to take more work to get through that overhead resistance. Neutral is my rating on Canadian stocks. I've lowered it from last week, which was bullish last week. And I think, again, just a little bit of profit taking there. Still, the trend is good. It just looks like it wants to take a pause. I remain bullish on both time frames for gold. Neutral long-term on oil, bullish short-term. We just started to have a little bit of a tick higher as the week ended, and that may continue into next week. So after drifting lower for a few days, U.S. stocks started to turn up again on Friday and may try to retest that resistance soon. Canadian stocks are seeing some profit taking in the short term. Gold starting to resume its upward trend line while oil goes up with less exuberance, and that could help the Canadian market next week. Fear fell back on Friday, again showing that the buyers still are stronger than the sellers in the long-term time frame. All right, well, that has been the Stock Scores Market Minutes. Make sure you follow me on Twitter at StockScores and also subscribe to this YouTube channel. Have a great week in the market and trade well.